Welcome everybody back to Two Dudes Views. I'm Quentin Scott. It's Matt Layton. We've been talking about finances over the last couple of weeks, and one thing Matt downplays a lot, but he is the orchestrator and writer of what's called the Consumer Stress Law Index, or CSLI, that you'll hear referred to. It's been promoted by Yahoo Finance, Forbes, different outlets that talk about it. And every month when Matt produces it, he gets calls, he gets phone calls, he gets emails that people just want this data. And it talks in depthly about how legal issues affect consumers, businesses, and big organizations. And so we're going to talk about that this week because we find interesting. It really is a big part of what we go off of and kind of how we dictate even some of our own personal decisions because we can see foresights coming and forecast things coming off of it. But Matt, just tell us kind of like where the law index came from, kind of the mastermind and or maybe even group behind it and what the purpose of it is.
Sure. So really what the index is, the CSLI, right? Consumer Stress Legal Index, what it does is it tracks on average 150,000 legal service inquiries or requests for legal services per month from just everyday Americans, right? That's what our business here is at LegalShield. We make lawyers available at an affordable rate for people to ask any of their legal questions. So we have back to 2002, we have 35 million individual legal requests for service. So we got to thinking, right? I mean, this has to tell us something about the financial condition of everyday American households, 35 million of these things. So we began just measuring it and monitoring it on a monthly basis. And again, to the tune of 150,000 requests for service per month, we built this index, and it's what it does is it measures the volume and kind of the subject matter of why people are calling lawyers. What are the specific issues that individuals are calling lawyers about? And the real cool thing about this data is that this isn't a survey that we send out asking people's feelings, right? We're not doing sentiment analysis on, comments back to us. We like to say this is hard data, right? Not
Yeah.
soft data. We're measuring the volume and the frequency of just everyday folks like me and you requesting legal services for issues that they're experiencing in everyday life. One of the funny things I like to talk about, but it's not really funny, but kind of comes off as, right? I mean, folks don't call lawyers for a good time.
Yeah.
They call because they have an issue or they're concerned about a potential issue. And again, this is what makes this data so powerful. I think I think it gives us a real-time pulse of the financial situation of the average American household.
Yeah, because what you're pulling, people will see if they get to the index or they look at it, is, we're not just talking about, speeding tickets and jaywalking and criminal charges, which we also, our company helps with that, and lawyers do things with that. So if you want more information on Legal Shield, obviously you can find that online or we can direct you that way. But we're talking about everyday Americans. They're calling foreclosures, collections, things that affect their wallet, their bank account. They may even be preemptively calling about trusts and things like that as they get ready, especially with the economy coming. Um, so explain a little bit about kind of how, you said you've built it from past data and hard data. And I really like, we've always talked once it's built, we chat about it for probably a week or two, just how interesting it is. But it even kind of dictates home buying. Like you talk about, we when I worked at the bank, me and you would talk about how it dictated mortgage lending, of how stress index of foreclosures proved the market would be going down. So talk a little bit about how like you can kind of forecast the economic view, and not just of Oklahoma, because we're an international company, but this, we're taking international intakes. But talk about how you can kind of forecast like this is all over. This just isn't one subset of a people group in America.
Yeah, not only one subset or one specific issue, we've got the ability to look a little bit into the future. And you said it you said it perfectly, right? We're measuring calls from the average person to an attorney about an issue in their life. And you mentioned preemptively, right? And that's what gives this data a leading indication. So we think that the consumer stress index really gives us a front row seat to the legal and financial challenges of everyday Americans, right? Often and most of the time before the traditional economic indicators can catch up to that, right? So again, the CSLI or the Consumer Stress Legal Index, that's kind of the high level flagship index that measures overall financial stress of the American consumer. But underneath that index, we've got several sub indices that kind of go deeper into the details, right? So it's composed of a bankruptcy index, which we can talk about that because that was kind of the headline of our recent press release. So bankruptcy index, foreclosure index, consumer finance index. Those three sub indices
Mhm.
roll up to and then create the consumer stress index. And in addition to those, we also have a housing index and a housing construction index. And what's really interesting is all of these indices were built with a corresponding or another index in mind that's kind of the leading economic indicators out there in the market. And we built our index not only to track those, but to lead those, right? So the
Yeah.
consumer stress index, for instance, it was built to, give additional information, but track and lead the conference board's consumer confidence index, right? So we do an extremely good job of following theirs. Also to our data is highly with a high correlation. We're up to a 45 to a 60-day lead time on their index, right? So our index is telling us things 45 to 60 days before the conference board's consumer confidence index is released and tells them what they're learning. And the same with bankruptcies, that tracks U.S. bankruptcy filings. And with an over a 0.9 positive correlation, that bankruptcy index tracks bankruptcy filings in the United States. Same with foreclosures.
Yeah.
Um, the housing sales index, that tracks, existing home sales with a 30-day lead time. Housing construction index, that tracks the reported housing starts numbers. And that's
Yeah.
a current all the way up to a 30-day lead time.
Yeah, you mentioned bankruptcy, and maybe we're saying bankruptcy and foreclosure because, like it or not, you can't do like Michael Scott does in the office and just scream, "I declare bankruptcy," and it's taken care of. But bankruptcy and foreclosure are both legal actions that have an attorney involved. An everyday American can't I don't believe, I may be incorrect, but can't file bankruptcy. And you have to have a lawyer actually file it for you. And so, talk a little bit about, what you guys are seeing in the stress index, because the economy, we talked about it last week. Economy right now is everyone thinks it's this big bubble, it's this kind of stress. But really, this is where bankruptcy can be a lead indicator of like people who are over leveraged. The bank starts calling the notes, the stock starts calling those where short start losing out because they're starting to get options called and they don't have the cash available. So explain a little bit about this. And this bankruptcy goes from household Americans all the way up to businesses. This just isn't one subset of kind of how you look at that.
Sure. And as you can imagine, you probably just don't wake up one morning and then start worrying or want to declare bankruptcy. To me, it's the end of a longer process, right? So we knew this was coming, right? There were warning signs ahead of time. And that's why we also see in our data increases in requests for service for um, billing disputes, collections, repossessions, all those things are, I like to call them the leading indicators or the early numbers in terms of requests for legal services that could lead to bankruptcy later on. So we've been seeing those increase for, you know, 8 to 12 months now. And what we're seeing on the current report, and again, this is Q1 2025, bankruptcy legal inquiries reached the highest we've seen since early 2020. And if you'll remember, early 2020 is basically pandemic, we shut down the world. There's a lot of government intervention that, delayed payments and helped people, not have to worry about their bills. So really what we're seeing now is we've we went back to those pre-pandemic levels, and again, because we're a leading indicator of bankruptcy filings, we believe this bankruptcy surge is going to continue through it, at the very least mid to late summer.
Yeah, and you talked about, surge, and there's kind of a bell curve to this thing, and like it'll reach its kind of peak and then it will cool down. We're not saying the world's going to burn to the ground, but we're saying we may be on the uptick of this thing, and that's what the
Yeah, hey, none of these indicators are flashing immediate doom and gloom, but what they are showing is a slow and consistent trend, upwards, or a slow and consistent trend toward more concern and more stress. I mean, you can even just look at the recent financial news, right? You know, loan delinquencies are rising.
yeah,
The average credit card debt someone has reached near all time highs. Interest rates are remaining high, prices are remaining high. The accumulation of several years now of high inflation, those have prices higher than normal. So folks are concerned, right? There's not any money left at the end of the month. They're they're
right.
they're calling lawyers asking about what happens if I miss this payment? Which payments can I skip? Right?
Yeah, and to your point, we legal advice in these scenarios is imperative, because these are life-altering moments. These aren't just I'm curious what happens if I file bankruptcy, or what happens if the bank takes my house. It's to your point. Yeah, I've been thinking about this for probably 60, 90 days, and it's really crap's hitting the fan, and it's time to move, and I got to call somebody. Unfortunately, sometimes our lawyers are called way too late, and they do everything they can. But you're in the
Well, and just think, right? I mean, luckily, at least the folks we're talking about have access to a lawyer, right? And they can call and ask questions. And it's still a bad situation, but maybe they can make the best of a bad situation, right?
right.
But this is occurring across the North American household, right? So regardless of whether someone has access to help, access to a lawyer, access to any type of financial counseling, folks are going through these issues, right?
Yeah, that's what I was going to say is, we're seeing just a small group of what our membership base is. And so you extrapolate that up to the American people, and we'll leave the Canadians up north, into their own, but then to the American people, you're talking millions in bankruptcy and then foreclosures and things. And so again, we're not doom and gloom, but we're just saying like people are calling and asking, and that's what your indices shows. People need information about what happens if dot 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 I
Right.
can't
And,
do this.
either fortunately or unfortunately, our indexes have proven to kind of, predict the short-term future. So again, I'm not saying bankruptcy filings are extremely high right now. What I'm saying is over 20 plus years, our index has suggested that when we see higher requests for bankruptcy related matters, those normally do result in higher bankruptcy filings. So again, the consumer is stressed as prices remain high, and then we can even talk about tariffs. I'm not here to say it's a good or a bad idea, but what I can say is that if these tariffs do in fact, whether short or long term, increase prices, that will in fact cause increased financial stress.
Yeah. Now, I don't know if you have any. I know you said the kind of headline this month was bankruptcy, but foreclosures. The housing market's always something. Since 2008, it's been very, we'll say speculative, of just are prices right or interest rates right. Even right now with the Fed chair not lowering interest rates, and there's not enough supply, not enough demand, back and forth. What are you seeing in the foreclosure area? Because with bankruptcy, along. Usually bankruptcy is filed to save from foreclosure because
Mhm.
they'll liquidate whatever they can to save their house so their kids have somewhere to stay or they do. Are you seeing any lead indicators into foreclosures that we could be seeing, not maybe another 2008, but it can be getting there?
Sure, and it's foreclosures aren't at the level of bankruptcies now, but we are seeing slight increases month over month in that foreclosure index. We're still below where we were pre-pandemic, but just like bankruptcies, very, very quickly we're moving toward that direction. And kind of back to the housing sales, we're seeing that index slowly go down, right? Because even though we've reduced interest rates, I think twice now, that mortgage rate hasn't come down very, very much at all. And you can imagine, as we're seeing continued increases in consumer financial stress, a lot to most people just aren't in a position to think about upgrading their house, taking on a larger mortgage payment. That's just not what's happening when we have an increase in consumer stress. And as the impact of that, we are seeing the housing sales index slowly march downwards.
Yeah, and to be fair, and Jerome Powell, who's the Fed chair right now, at least while we're recording this, we never know what his future is, especially with the arguments going on right now. When he lowers the interest rate, it's really the bond rate, so it doesn't directly correlate or affect mortgage rates, which are backed off, correct me if I'm wrong, Matt, securities. And so those take much longer to lower. Bonds are more of your car rates, your credit card, things like that. That's what he's directly affecting, which is consumer. We mortgage can kind of be consumer, but you're talking about this is affecting the everyday person who's trying to go buy groceries, go buy gas. They're making very hard decisions, and you're just seeing lead indicators that it's getting harder and harder every month for them to make those decisions.
And it's not that big of a leap to make, right? To say if I'm stressed financially and worried about my bills, I'm probably not in the market for a brand new house, right? And then kind of on the opposite side, even on the housing construction index, we're beginning to see that slowly drop. And we think there's, twofold reasons for that, right? And again, it's that increase in consumer financial stress because, there's not that many house buyers out there, not that many new home buyers looking to, go out and find them a larger mortgage payment. That's kind of dampening the need of additional inventory. Plus, we're already seeing how the tariffs impact construction materials, right? So those folks out building those houses, they're having to pay more for the raw materials to build houses, which drives the price up even higher
Yeah,
again to a consumer that's not ready to take on those increased prices.
at 21, 22 prices all again where you couldn't get that was a supply chain issue. Now it's a price issue. So we
It
just
is,
have
and specifically, right? So when we're talking about, and again, it changes so often. I don't know where the specific tariffs are landing currently, but we get a large percentage of our lumber from Canada, and we're talking 20-25% tariff there. Sheetrock or gypsum, majority of that comes from Mexico. We're talking about another 20-25% tariff on those goods coming, from the north and to the south. All of those land specifically on housing construction.
and I don't know if it's inflation or just greed, but I know a couple years ago I saw a fence panel for sale at a JB Lumber here for 19.99. And then last year I drove by and it was for sale for 49.99. So I don't know if they marked it up just causing inflation or if that's really what lumber costs. But hey, you know what? Someone got past the $40 that it cost someone to at least the spray paint to that sign to put
Prob-
another line on it to make it that one of four.
Is
So
probably a little bit of both, right?
So, just wrapping up today, and you may have some more to share, but like what should be when people go, just what we hope is people go look at the law index, save it in your favorites, follow it. It's updated every month. It really can give you really good insights into what legal issues are going on and what's driving the economy. But what's two or three big takeaways you think the person first sitting down, look at the law index, I'm gonna call it the law index because that's what it was when I first started. It's called the Consumer Stress Legal Index now, so we've changed its name once or twice. What are the first two to three things you think when someone new is looking at it? What would you say? This is the key points to look at and to get the most out of it.
Yeah, and it's really going to be that high level index, the consumer stress legal index. Is that trending up or down? And it's really what's your point of view, right? For the average everyday consumer, you're probably already feeling a lot of these things. But if you're not, this consumer stress index is going to tell you there's a high chance. Be ready, be prepared, right? Have your financial house in order. And then if you're a business owner or an investor, or if you're like a politician or in public policy, know what the consumer is facing so that you can make decisions for your business or your constituency, knowing how they're feeling, right? And again, I'm saying, what we're seeing is the stress isn't just rising, it seems to be becoming more ingrained in the system, right? Again, we've got a long, consistent increase of consumer stress. And not only ingrained, it's becoming more legally complex, right? Whether
Hmm.
it's, debt, housing, consumer finance, the legal system's increasingly showing up where those financial pressures are, right? And I'll just end with this, right? If you want to know where consumer sentiment's headed next, you might be smart to watch, where the lawyers are the busiest.
Yeah, great ending. And so I don't have anything else to share, but I will just tell people we'll have the link to the law index in the bottom of the comments. If you, for any reason, have any questions or want Matt's the author of it, so reach out to him. He definitely has more answers on it. If anyone just wants to talk about it, we'd be happy to have anyone sit with us, talk about it. Anyone that is a financial expert that may want to rebut some of it. We'd love to have that conversation and
Absolutely.
just have the back and forth of what may be we missing because we're experts, but we're not key experts in everything. So we love to hear things that may change our data or may at least um, intrigue us into something else. So, Matt, if you don't have anything else to share, we'll
Nope, I
call it a
don't.
week. See ya.